afternoon. It's Quant Trade Edge, and today I wanted to go over the indices, primarily the Nasdaq, but also the S&P. They had our Forex trade, and they set up multiple times. Well, the Nasdaq set up multiple times, and I just want to walk you through the whole process. So first, you start with a daily chart, and you have to have a reason to want to be in a trade. And we're looking at the daily. What gives us our daily bias here? You know, we had this up move, and then we had a hoagie, and a hoagie is just a bar that has two or more bars inside it, like this did. And that's just indecision. It's just like each doji is indecision, and inside day is indecision. Well, three of them in a row is even more indecision. And you can see that yesterday we tried to break below it and got rejected. And that means taking out this high, if after you false break out from a range one way, you tend to explode out the other way. So that was the bias coming into today, that if we took out this high, we would have a 4x trade to the upside. And again, a 4x trade just means when you have a good context in which the daily trend will change. So here, this was the last down bar in this sequence. This was an up bar because it had a higher low and a higher high. This is an up bar because it has a higher high, higher low, higher high. This is an up bar. This is an outside bar, so it maintains the same sign. This is an inside bar, it maintains the same sign. Now, this is where I differ from Gann's traditional education. He would basically tell you this was a down bar because relative to the last bar, it's a down bar. I say it's still an up bar because it's inside this hoagie, and anything that happens inside this hoagie doesn't matter. Then we would both agree this is a down bar because it does have a lower high and a lower low, but it also pierced that hoagie. So the way I view this is this up to here is the up move. This is your down move. If you take out that high, we're back into an up move. So for multiple reasons, one being the false breakout of the hoagie, another reason just being down to up, and you know, we had at least half the body in a tail. It's not ideal. Ideally, you would like this to be a very small red candle or even a green candle, but at least we have half the body as a tail here. And then, you know, as we know, things, you know, try to move in two-way patterns. So this is our attempt to capture the upside here. So I just wanted to spend a few moments on that daily context because that's very important. We're not trying to do it at every turning point. When there's good daily context, then we want to try it. So now I'm pulling this back to a 1-minute chart, and let's go 24 hours because this set up before the pit open. And let's get rid of all the extraneous lines now. And let's add in our high and low so we know when it took out the high. It took out, so this is a 1-minute chart of today, and we pierced the high at 5:42 a.m. on the 1-minute chart. Well, it would have been on any chart. So what we do is we wait until it stops going up, and then we look for a two-wave pattern to buy it. And so the reason we want to buy it is because the daily trend has now shifted from down to up, and we're just looking for a smaller down wave, two-legged down wave, which we got right here to buy it. And these two had equal lows, 81, 81. So that makes this the last down bar in the sequence, and that's what you would risk off of. And this risk here would have gotten 4 times your risk at 17,00850, I think it was. Yeah, so right up here, that was 4 times your risk. And then what's nice is this pattern here that's set up immediately afterwards on the 2-minute chart was another attempt. So let's go back to our trend lines. These lows are all the same, 91.25, 91.25, 91.25. So essentially this whole thing is a hoagie right here. So that means your first down wave is to this bar, which made it a tick lower than the hoagie. And then we have this up bar, and then we have this down bar, which went outside to the downside first, so there was no false break, but that's a 2-minute ABC. And this became your risk bar for that. And the 4 times your risk on this went up to 17,039, which I believe we got. Oh, no, we actually didn't get it until up here, 17,039. So this was a little nerve-wracking to watch this happen, to have to sit through news. And this spike on the news got as low as 16,991.75, which was like less than 2 points away from the stop. 91.75. So you can see we wouldn't have gotten stopped out, but nerve-wracking enough to do that. But then within 2 bars, so 4 minutes or 6 minutes, we got to the 4R target on that. And by this time, we're at 7:40 in the morning, and we may as well switch to a pit chart, because the next setup occurred after the pit open, and that was on a 5-minute chart. So let's see if I can find it. There we go. So this is the 8:30 bar. Not sure why those are all there. Whatever. Okay, this is the 8:30 bar, and we made a little relative high on the 8:40 bar. And this is a 5-minute chart now. So we've already made 4 times our risk on the 1 minute, the 2 minute, and now this is the 5 minute. This low is 650, this low is 7. So this is a higher low, higher high. This begins the up wave, and this being outside to this, it takes this label, so it's also an up bar. And then thankfully this ticked below, otherwise it would have been a very large risk bar. This low was 87, this low was 86.25. So this completes our down wave. And this is our entry bar. And 4 times our risk up off of this entry bar is 17,092.50. And we got to that on this bar here, 92.50, right there. So it's interesting if you note, like on that 1 minute, go back and rewind it. On the 1 minute, we barely got to that 4R. On the 2 minute, we barely got to that 4. It was to the bar, and again to the bar, which really makes me think that something that drives the markets is causing that 4x, hence the name 4x on the pattern. Then, as the day matured, if you switch to a 10-minute chart, which we realized yesterday, a lot of the stuff worked out well on a 10-minute chart, which I was blind to since I was looking at 5 and 15, but thankfully my partner Alex was looking at the 10 and pointed it out. But here, by the time, if you remember, this was the bar where we got our 4x on the 5-minute chart. It's also a bar that very nicely completed 2 waves up on the 10-minute chart. So even though today was a rangy, choppy day, there were a lot of opportunities where the risks, where your return was asymmetric to your risk. This would have been, what is that, 17, I think about 5.5. I think I looked at that earlier. That's about 5.5. And then, now here's where my hoagie rule would have bit me, because if you look at the pure Gann count on this next set of 10-minute chart, you had an A, B, C down, which would have set this up as a risk bar, which would have given you an amazing upside again here, at least 4, probably 5.5. But remember, the way I look at the Gann count, and again, there's no not saying that I'm right. It's just something that I do because of my experience and what I've seen. This whole thing was a hoagie. So in that situation, 93.50, 93.50. So in that situation, this is really just one leg down. So that wouldn't have set this up as a two-legged place to buy. Now, I just wanted to switch over to the S&P, and the daily has the exact same impetus, the same reason we want to trade it, and that is, here's a hoagie. Well, here's an up wave. Here's a hoagie. There's a false breakout. It even closed outside of the hoagie. This close was 69.25. That low was 72.75. So you even have a close below that hoagie. So when you take this out, you've surely trapped shorts. People that got short yesterday on this break and are disbelieving this rally, you really got them at this when you take out yesterday's high. So let me put the high-low indicator back in. And this happened way after all of the stuff played out on the Nasdaq. This is 1:30 in the afternoon. And if you remember from, I think it was last Monday, where we had a Forex trade on the Nasdaq, and it took until that Forex trade was closed before the S&P set up its Forex trade, and it still went for Forex. So with that memory fresh in mind, I was eager to jump on the S&P. Usually you want to be on the leading market, but it almost seems like it's almost more certain to be on the lagging market here. Knowing that the Nasdaq played out well should be a good sign for the S&P to play out well. And we broke above 1324, 124 in the afternoon, and by 1:30 we started a pullback, and we got a clean two-legged pullback on the 2-minute S&P. This wasn't as tight as a bar. I mean, I would have hoped for a smaller bar because that would have made it easier to hit 4X. But, being late in the day, 4R on this would have been 1925. And we didn't quite get there. We got as high as 17. So that was probably 3.25 R. And who knows, we may still get it, but I don't advocate holding this overnight. That's a totally different session. But again, structurally, you see how contextually the break of today's high on the daily chart sets a trap for the people who sold the hoagie low. And then once we break that high, we find the lower time frame retracement, and that gives us this huge asymmetry. So those are the kind of things we like to focus on at Quant Trade Edge. If this type of trading interests you, definitely watch all the videos, and if that style resonates with you, come join our Discord, and we're happy to discuss more in there.